This is the stock market. The stock market, yes. So you are a stock market specialist? Yes.
$20 billion. That's exactly how much Indian traders have burned in the markets over just the past 3 years. Think about it. What could that money have been spent on? For example, buying 1,500 new trains in Germany, or building 60,000 schools, or relocating millions of people from slums into decent housing. Not long ago, we were amazed that French traders had lost 160 million. And here, 20 billion. Yes, you might object. India has 1.5 billion people, while France has only 60 million. But let's be honest. You, like me, not so long ago thought that India's entire market capitalization was about $20 and a bag of turmeric. So how did it happen that it was the Indians who managed to break all possible anti-records? To answer this question, let's take a look into the life of an average Indian. Imagine this. You were born in India. Not the best start already. With about a 70% chance, you come into the world in a poor neighborhood. You somehow make it to the age of 6 without much attention from your parents. In the family, besides you, there are 3 more children. Then comes school. 1 classroom and nearly 100 students. What kind of education quality can we even talk about here? As a result, with about a 75% probability, by the senior grades, you still won't have learned to read simple sentences in your native language. But does that mean everyone lives like this? Not exactly. Let's say you're a genius. Terrible conditions didn't break you. You passed your exams with top marks, got into a good university, and graduated perfectly. It would seem success. But wait, there are several million people just like you. The competition is insane. Finding a job with a salary of at least $200 turns into a quest. You don't want to slave away in a coal mine. To get into an office, you have to sell your soul to the devil. And it's exactly at this moment that 3 main social elevators open up before an Indian.
In first place, freelancing. But if your family is poor, and with a 99% probability it is, then you can't even dream of a decent computer. With your salary, you'll be able to save up for one in about 30 years. The second option is scamming. But for that, you need good English and a complete lack of moral principles. So this path is also closed to most people. And the most unpretentious option remains: trading. The entry barrier is minimal. You can trade Priyama from a cheap smartphone. Internet in India costs next to nothing. For $1.50, you get 30 gigabytes, which is more than enough to open trades. Now, let's honestly think. What chances does a person have to become a good trader if all his life he didn't live, but survived? A rhetorical question. Trading requires a cool head and emotional stability, not PTSD from corpses in the river and toxic sludge from the tap. You and I can afford antidepressants and working through childhood trauma. There, people live in a reality where self-reflection is an inaccessible luxury. But even this still doesn't explain the title of the video. Why ulcer? After all over the world people trade. Yes, they lose money, but without catastrophic consequences. And that's true, but not in India. Your usual trading is entering a trade and waiting. There, it's different. A huge number of Indians trade expirations. Essentially, these are the same binary options, just legal. Each such contract has a lifespan, the moment when it either turns into money or into nothing. On expiration day, these options cost almost nothing. You can buy a contract for $5. If within the next hour the market doesn't move, the money burns. But if there's a sharp jump, those $5 turn before your eyes into 50, 100, or even 200. For a poor Indian, this looks like perfect math. He thinks, what is $5? A couple of lunches. But if he's lucky, in an hour he can earn his father's monthly salary. And he buys this ticket, then another one, and another.
The problem is that in India, expirations happen almost every day. Different indices close on different days of the week, turning the stock exchange into an endless conveyor belt for burning money. Type expiration day strategy into YouTube, and in the search results, you'll see almost no one except Indians. And if you open any of these videos, you'll be shocked by the number of views and subscribers. Although no, what shocks you the most are the comments. Funny? Yes, me too. But that doesn't make me feel any less sorry for these guys. They naively watch these videos and then go take out loans. And this is not a joke. So you understand the scale of the absurdity. The Reserve Bank of India tightened lending rules because it suspected that a significant portion of consumer loans is being used not for their intended purpose, but for playing the stock market. And what do you think? Did it help? Of course not. If they don't give loans easily, it means people will take them against collateral, against gold. And now it's important to understand what gold is in India. It's not just jewelry and not a rainy day fund. It's daughters' dowries collected over generations. And when an Indian goes to pawn gold, that's no longer an investment. That's a cultural shock. Over the past 3 years, the number of gold-backed loans in India has increased by 75%, and the number of retail traders by 125%. Formally, this is not a direct correlation, but an indirect one is more than obvious. And this is not my fantasy. The Reserve Bank of India has already openly expressed dissatisfaction with the situation, accusing lenders of irresponsibility. They don't think about whom they are giving money to and for what purpose. The bank directly or indirectly pointed out that a huge share of loans goes to investments, trading, and other ways to simply burn money. The Securities Board of India holds the same position. Their main thesis sounds like this: we are concerned that household savings are being directed not toward capital formation, but toward speculative activity. Under capital formation, the authorities mean a simple thing: money should go into business development. But if investments don't come into business, business simply doesn't appear. Why should an ambitious and motivated young person create a product if no one will support it? No one will invest in him, no one will develop it, no one needs it. In such a situation, a person has no reason to grow in his homeland. That is exactly why the best talent flows abroad, developing the economies of other countries, while India is left with gamblers. To somehow reduce the scale of the problem, the authorities raise taxes on speculation, trying to make private trading economically unprofitable for small players. As if before that it was insanely profitable. At the same time, they increase minimum lot sizes to cut off those with little money. But besides the people who pawn the gold of their wives and mothers for the sake of options, there is another huge group: the dreamers of capital. These are the ones who learned about the existence of prop firms. For those who don't know, these are companies that promise to give you large sums under management if you prove that you know how to trade. The scheme is elementary. You pass a challenge, make a conditional 10 to 20% profit, and they give you access to a pseudo-real account with $5, $50, or even $100,000. If you earn money, the profit is split, and most of it goes to you. Now imagine what is going on in the head of a guy from the slums of Mumbai. In his reality, his friends sell fried locusts or fix old flip-flops for 10 cents a day. And here, the status of an official trader and a number with 5 zeros. For him, this is not just a job. This is a ticket to another planet. A chance in one evening to earn more than his village has seen in its entire life. For the sake of this ghostly dream, he is ready for anything. He will starve for months, save on every piece of food, just to scrape together a miserable $20 to buy a challenge. For a Western trader, this is the price of lunch at a cafe. For him, the cost of several months of life. That is why all this statistics look so insane. India consistently generates about 40% of all global traffic on sites like FTMO or Funding Pips. If you think that's an exaggeration, just go on Instagram for any prop firm. Open the comments under any post, and you'll see the same thing. 90% of the comments are Indians begging for a promo code. Gambling addiction is not the cause. It's the consequence of catastrophic poverty. And don't be fooled by the huge GDP. Of course it's huge, damn it, when the country has 1.5 billion people. But that doesn't change the fact that only about 5% actually work, and the other 95 dig in the dirt for a bowl of rice. After independence in 1947, India decided the USSR was cool and started building a planned economy. Want to open a factory? Get 80 permits. Want to increase sales? Tough luck, quota exceeded. Want to import technology? No way, we're for self-sufficiency. The result? Zero competition. Consumers eat what they're given. In 1991, the screws were supposedly loosened, but the market was immediately taken over by insiders, families like Ambani and Adani. They built a system where power is funded by the rich, and power, in return, gives them the biggest slice of the pie. Add castes, add superstitions, where a cow is more important than a human. And in the end, you get exactly what was bound to happen. The fate of millions of Indian gamblers couldn't have turned out any other way. That's why, if I were in the authorities' shoes, I'd be happy that only 20 billion was lost, not 200. Almost forgot. Happy New Year! Spend this year with your loved ones. You definitely won't regret it. And see you next time. May everything go well for you. Bye.